Hey everybody, Boris. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for August 7th to August 11th, 2017. And I think in some ways the COM dollars are going to be a very interesting trade this week. Certainly we got the biggest event risk coming up because we have the RBNZ on Wednesday as the only central bank decision this week, and the focus will be on Kiwi, no doubt. But COM dollars, I think, suffering from the exact same thing in some ways. Some of them, in fact, the caddy, in my favorite point, suffering the same kind of a profit-taking move against the dollar. We've had this massive influx of flow into Aussie, Kiwi, dollar CAD, all of it on anti-dollar flows. And this was the week, this past week, where a lot of that got unwound. And I think the next week is very likely going to be a further outflow out of carry, especially, and this is the critical thing, I think with the COM dollars, you have to watch U.S. yields next week. If U.S. yields show any kind of rally, that will begin to weigh on Aussie and Kiwi, especially as the carry trade flows come out of the trade. On the calendar, not much, as I said. Really, we do have Chinese trade data, which could be interesting for Australia, of course, and then we do have the RBNZ rate decision, and that's pretty much it. There literally is nothing. There's no Canadian data. There's nothing here of any merit or value aside from that. The RBNZ is certainly going to be a very big look. I don't know if they're really going to try and talk the Kiwi down. I certainly don't like to have the Kiwi at 75, but I doubt they're going to be very aggressive in their conversation. Still, it'll be interesting to see just how much of a impact that's going to have on the Kiwi. As far as the levels go, we've certainly backed off the highs, with 80.50 now the big resistance. And as a matter of fact, I think 80 now becomes a very key resistance for the Aussie. And it looks like it really wants to come to 78, and 78 is the support for the Aussie. With dollar CAD, we had a very clear turn. I'm going to show this to you on the charts. About as clear a turn as you can get technically, that this has sold out. It's time to get long dollar CAD, in my opinion. That's one of the strongest signals that I see here at the beginning of the week. With support now at 25, resistance at 27. One of the interesting things that happened with dollar CAD, by the way, is we had strong employment data on Friday, and yet the pair failed. So whenever you have good fundamentals, and the price action goes the other way, that's a very good tell that there's going to be more of that price action going forward. It means the market is ignoring the fundamental data and wants to go the other way. So I like dollar CAD to the upside very much. And Kiwi dollar, resistance at 75, that was something we've been harping on forever, and that's kind of failed continuously now, but support does come in at 72. So let's take a look at the charts here, see how everything sets up. First, let's look at the Aussie. Here's the weekly. The Aussie definitely failed out here at the 80. This is a clear double top formation right over here against this this play. But you know, Aussie takes a very long time to unwind itself. So 78 is the natural level of support. That was the big breakout level from which we now are going to flow back into. Remember, we talked forever. This was a quadruple or quintuple top at the 77 level. So when we took that out, it was natural that it was going to run towards the 80s. Now that top becomes the support level at 78, and that looks like to be the drift towards the Aussie. Only if the Aussie takes out 81.50, really sort of like only if we move right above here, take out the former highs here, can you consider this to be a continuation move, and you're completely wrong. Until and unless that happens, I think it's very much a short at these levels as we get a little bit of profit taking. Kiwi, same kind of a thing, big failure at 75, even a clearer failure at 75 here. Ending up on the lows of the week, by the way, so that's a very negative formation. And I kind of like, I actually like selling Kiwi here very much into the front of the week on the assumption that we're going to drift lower ahead of the RBNZ, because they're certainly going to try to job on it a little bit. And that takes us probably towards a 73, maybe, really no, 73. I don't think we could get to 72 unless the RBNZ says something to the effect of that they're willing to cut rates. That would be a shocker that could take us down there. But for now, I think a reasonable drift lower towards the 73 level, quite possible ahead of the RBNZ. But the real trade this week, look at this turn formation. This is as clear a signal here that we've turned. Now you can see the analogs many times here. So you know, you have a correction, big candle back up, tends to forecast much longer move the other way. Huge downward leg, big candle back up, tends to forecast direction the other way. Now, the amplitude of the direction is unknown. So in other words, it could be 200 points, it could be 500 points. Really unknown. But the fact that we're going up, I think, is going to be pretty clear. And that's why I like the CAD to the upside as we start the week. Certainly oil, this the other thing that was interesting, is that CAD turned against positive oil. Oil is at 49, and yet CAD turned, which means that the market really is exhausted. It's kind of sold out over here and looking to basically take CAD back towards 27, possibly all the way out towards the 130. So to me, dollar CAD, probably the best turn trade for the next couple of weeks, not just this week, but the next couple of weeks, as it shows relative weakness on the commodity scale. Wish you guys the best of luck, the best of trading. Boris, over and out.